I'd read most of the Buffett books out there, most of the Berkshire books, and they all tend to be how to invest like Warren Buffett. They're mainly about Warren Buffett. But Berkshire Hathaway, what I learned is Berkshire Hathaway is not just Warren Buffett. It's Warren Buffett and the personality trait that makes him the most successful investor that we know of. And I'm going to let that hang for a sec, that personality trait. It's also Charlie Munger, because without Charlie Munger, there's no See's Candies, and without See's Candies, there's no Coca-Cola, and without Coca-Cola, there's no Berkshire Hathaway as we know it today. 3, it's the businesses they bought, everything from Burlington Northern to Ginsu Knives. But it's also, most importantly, the shareholders. Buffett set out to get what he calls quality shareholders. That's why he's so forthcoming about what he does. He wants investors who really understand the drill. And so when they wake up one day and see that he bought a railroad company for $45 billion in total capital, they don't freak out. They just say, okay, that fits. Easy to understand business, good long-term value, honest management. Okay, that fits with what you said. Good return on capital. Okay. The most interesting thing I thought happened that day when he announced the acquisition of Burlington Northern was nothing happened. Stock didn't move. No one freaked out. Everyone was excited, but no one freaked out. Biggest acquisition we've seen to date, no impact. And that's a result of Buffett getting quality shareholders who understand his message. Now, the result is Pilgrimage to Warren Buffett's Omaha. I'm going to read you a couple of quick excerpts from it to illustrate some of these issues. The first is a chapter called Why Omaha? I don't know if you've ever wondered why 2 of the world's most successful investors are from Omaha, Nebraska, and not Greenwich, Connecticut. I think it has something to do with being in Omaha. Our plane descends through a dense gray cloud cover over western Iowa. We're over farmland. This geography looms large in Warren Buffett's life. In 1945, he bought 40 acres of farmland that he'd earned with money he'd earned from a newspaper route, $1,200 worth. He was 14 years old. And to this day, he frequently compares investing in farmland to investing in the stock market in order to underscore the importance of long-term thinking. If you were to look at a farm out here in Omaha, he says, you wouldn't look at the price every day. You know, us guys on Wall Street, we look at the price every 10 seconds. Buffett says you wouldn't look at the price of the farm every day. You'd look at the value of what the farm produces relative to your purchase price. And that's all we do with stocks. It's very easy to say, it's very hard to do every day, and that's what Buffett does. Now, he's called the Oracle of Omaha, and I take a kind of tongue-in-cheek exception to that. If there is one word that describes Warren Buffett, the Oracle of Omaha, it is not oracular, nor is it prophetic, divinatory, clairvoyant, extrasensory, telepathic, or anything else. While he may be known as the Oracle of Omaha, there is in truth nothing oracular about him. Yes, it's true that in May 1969, at the peak of the go-go bull market, he closed his portfolio, his partnership. He returned all the stocks and cash to his investors. He kept one for himself, Berkshire Hathaway. He told investors, opportunities for investment have virtually disappeared. It's also true that 5 years later, in October 1974, at the depths of the bear market, when the Dow Jones had collapsed, the American economy was mired in price controls and gasoline shortages, Buffett issued the most bullish, unequivocally bullish, investment call I think you'll ever find when he told Forbes magazine, now is the time to invest and get rich. It's also true that after Drexel Burnham went out of business and the junk bond market collapsed, Warren Buffett bought $500 million worth of junk bonds. And when old economy brick and mortar companies went out of fashion during the dot-com bubble, Buffett literally bought a brick company, Acme Brick. In his 2002 letter, Buffett warned about the US dollar. He thought it was on a path to decline, which proved absolutely correct, and he wrote a stern warning about something called derivatives. He called them ticking time bombs. These stories are all true, but in every case, Buffett was not trying to predict the future. He was rather being entirely rational. And that's the personality trait that makes him the most successful investor we know. Everything he does, rational.